to get through NVIDIA earnings, and hopefully that provides some type of catalyst.
What's
But
up? What's up? What's up? Should be
SQI,
getting started
currently
here.
very low trading volume. Q's a little bit
Listen,
higher
listen.
than some of the past days. We had that
And we're
lowest day of the year
live.
back on the 13th, and we're trending right around that
Hour,
right
hour.
now. You did have some big movers, though, outside of there. SMCI pulled back a few percent here today. BABA, so the China stuff, that's moved up 7%. I do wonder if, people are tailing Michael Burry a little bit there, or they're just coming out of earnings. It could be a bunch of stuff. JD, his largest position that he just closed, was up 1.6% at this point today, and then PDD is up 1%. So you do have a little bit of a China move happening there. Kava, MSTR, a few others, little pullbacks here. Carvana, which I was talking about, that setup looking pretty good. Small pullback as well, about 2%. If people are still paying attention,
How we doing? Welcome. Brandon.
Is down 25%. AMC is
2026
down 12%.
Baba Calls. Welcome. You join. The first thing you hear is Baba Calls. That's good for you. Let's get this up.
So
Spine, let's change this to
they're still
Baba.
ways down, that they can definitely go here or back up. I don't care. I don't have a position.
Ooh, no.
So fight me whichever way you prefer. Myrna is actually putting in new 52
Spy, I want this to be 1 hour.
Really interesting. I think people are trying to get ready to short
Q, I
this
want this
back
to be 1 hour.
but it is not letting them. Moderna now at 132 and poking.
Welcome.
Really nice.
Ooh, 6 people right away. Wow.
Actually, it's last 3 earnings.
Let me get this link out a little bit.
And continuing to push up higher here. So maybe there's something going on there with the healthcare sector to pay attention to. Coinbase down 8% today. That one's forming a descending wedge. Looks a little bit ugly, if you ask me, in the area, but I'm not getting down on it. I think that one moves very volatile. It's kind of like similar to crypto, so you have to take the lumps as they come. And then just the last quick 2 updates. GCT, 3.27% today. This one's been piling around the 36 level.
How we doing, everyone? Welcome.
To get to the next level from here, and then Apple, it is sitting at $189.93, $10 almost exactly off of all-time highs. See if it's able to get there sooner than later. We don't have, I believe, any major earnings or things like that today, which people are going to really be paying attention to. Besides,
we do have AMAT, which is worth reading.
Yeah, just AMAT. They'll be looking. They've got estimates of 6.11 billion.
Ooh, Paul Debo, what's up?
$1.
VWAP or SMA on those charts.
Yeah, I don't think anyone cares about the others.
I want to still look clean. What should I add?
I think we have a couple that probably are worth touching on.
Small ones?
Maybe SMA.
And
how do I add it?
Despegar, Doximity, Applied Materials.
How small are these companies?
Take Two.
How big is Doximity? It's
Doximity and Despegar are both SMIDs, but they're popular stocks.
Okay, Take Two, Doximity, got it. I had to scroll down a little bit here, but yeah, I got you. Oh, this one's funny too, Evan. Look at the image for AGRO. It just says AGRO listed NYSE. That is their symbol. Some of these companies just have funny symbols that they use. All right, let's pop into it with the crew. I know we have some great people up here.
I see what you're saying. It's funny.
Yeah, I just very creative. You got anything, Evan, before I start rolling on here?
Nope, just your comment made me audibly chuckle, so good for you.
Thank you. It's almost as good as the Carl Icahn one. That one was pretty funny. Carl Icahn is literally just a picture of him sitting in a chair is their logo. All right, Dimitri, kicking it over to you. How are we looking?
What you got, Debo? I'd love to try something new.
Hey, Wolf. Great to be here. I also found
You're also going to have to teach me how to use it on TradingView, by the way.
When I noticed you followed my account, I was like, okay, I was wondering.
There you go, some stats by accident.
I had a call with Stock Talk. I kept realizing I'm calling you Stock Talk. I feel like this is some what's that show, like Black Mirror thing, we're referring to each other by our digital names rather than our real ones. So I guess with mine's pretty easy.
UMA is 12 and 26. Now, how do I find that?
I'm super doxed,
maybe
though.
here.
I think my profile does come up if you type in Wolf Financial or something like that online. So I'm not hiding it, but also I will say about 90% of people in real life do call me Wolf. So it kind of works both ways.
But yeah, anyways,
Which one?
I've got a couple of macro thoughts here, if that's cool. So just going to review some of the data that we saw. I think it's pretty important for those who missed it. Just do a real quick summary. So obviously we saw PPI for April on a month-on-month basis rise faster than expected. I think it was 0.5 versus 0.3.
Am I in the right place, Debo?
I looked a little bit more into it. It looks like that rise was attributed to wholesale goods prices rising, obviously the previous month, but more specifically, energy costs surged by about 2%, gasoline prices jumped about 5.4%, and diesel and fuel, home heating and oil increased like 3% and 2% respectively. there's just a couple of more, obviously stats in there.
Not...
What is interesting is that fresh and dry vegetables experienced actually a sharp decline of almost 20%, which I thought was a very interesting development there. Obviously, we got core PPI for the same period and interval came out also higher than expected, 0.5% versus the 0.2% expected. We did see core inflation rate come out recently.
Oh, something did happen.
The inflation rate just normal year on year.
What the hell?
As
Look
expected,
at this shit.
So obviously markets were pretty happy to see that, considering the previous inflation print and the PPI data that we saw. So contextually makes a lot of sense. Retail sales, though, took a bit of a hit on a month-on-month basis. They were down to 0%, and the expected was 0.4, and the previous revision was actually down, revised to 0.6. And I actually have a couple of thoughts.
Maybe I'll get
used
to it, but
like the consumer that I'm going to get to in a sec. As for the Fed, we all saw the commentary recently. It's not going to be a smooth road. We heard him say that
this shouldn't be the busiest of days, by the way. I just decided, fuck it, I'm gonna go live. Let's chill.
Confident in inflation going down now than he was before, and he's saying, we'll need to be, patient, let restrictive policy do its work, blah blah blah. And what is interesting is that the Fed, I was looking at it, did recently revise its
man.
PC.
I'm kind of just starting to enjoy. What's up, Ollie? I'm starting to just enjoy these.
2.4.
I hate how high up they go sometimes.
2% is still for 2026 is the same, but I thought the upward
so far
because obviously it signals definitely higher for longer.
Be nice to me.
As for the asset prices, we're seeing
Costco's
gold prices
having a
obviously
day.
catching a bit on the falling 10-year yield, so that's obviously good for those gold holders. Oil prices, on the other hand, are down like 10% since I think like early April.
Do a little all-time high list.
To be exact, there may be a floor here. I only say that because they've hovered around this range before earlier this year between February and March, so there could be something there. Nothing definitive. I would say it's partially from lingering geopolitical risk in the Middle East.
Tickers and DDs.
Kind of a shadow price effect, similar to what we saw with Bolton when he got fired, and it was only then that we realized how much just his presence in office alone was exhibiting, like a hidden upward pressure on crude oil. On May 14th, OPEC said that it expects world oil demand to rise by 2.25 million barrels per day. But it should be noted that for context, this didn't really change from last month, but it does give us a look into what we expect possibly at the upcoming meeting on June 1st. One report said, and I'm quoting here, despite certain downside risks, the continued momentum observed since the start of the year could create additional upside potential for global economic growth, blah, 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 blah. So in other words, assuming growth stays the same, which I'm doubtful about, and oil supply continues to be restricted, that's obviously a very
a lot of massive names hitting all-time highs.
Production cut 2.2 million barrels
Today
per day.
It's a lot.
Until June, until they extend it. If they really believe the economy is going to continue to be as strong as it is, or as it's purported to be, then I could see a very bullish case for oil. Having said that, I do think we are going to see weaker consumer growth in Q3 and Q4. If you look at the
these are all all-time highs, by the way.
People during the pandemic, you'll actually
see
that
all of them either.
Getting completely depleted now, which makes sense considering the fact that they were just hoarding all of this, and at the same time we were seeing a lot of layoffs. So and the rise of part-time jobs, like when we look at the jobs.
Yeah, I need something less, like just one or two things.
There's a lot of people working a lot of part-time jobs, and you have to also look at the industries that these jobs are being created in. I actually have an article on that I can put in the nest. But yeah, that's kind of it for me today.
Can you guys hear me chewing my gum as well? If you can't, I'll spit it out. That's kind of gross.
Had anything to say? Yeah, by the way, how do I put it in the nest? Is that possible?
Yeah, so if you want to put a post up there, you just go to the post on the timeline. You're going to click the share button in the bottom right of the post, and then at the top, you'll see a button that says Stock Market Talk, and to the left of it, it'll have the spaces symbol. Tap that.
I'm not like chomping the gum, so.
Okay, awesome, thanks. But yeah, anyways, that's it for me. So back to you, Wolf.
Perfect. Stock Talk, you got thoughts on the global macro?
Hey, sorry, I'm dealing with Leo right now. Give me like a couple minutes.
Yeah, no problem. Okay, keep it moving a little bit along here. Might double back to Stock Talk for some of those thoughts. Unless anyone else has specific ones that they want to come in with, in which case feel free to throw up a hand and jump in. If not, I am going to roll over real quick to George who we have on stage, George, and just get your take on this pretty crazy market that we've seen this week. It's come with a lot of
It should be up here.
Yeah, I mean, I didn't really think Meme Stock Mania was coming back,
JP Morgan.
I actually have some interesting data to share on it. I can admit I didn't really clock it before, but my company Prospero had some pretty interesting analysis on this GME AMC leading up to it. Where I don't know how common this is outside of certain retail trading environments that say this is all retail motivated, but we do a lot to isolate institutional trading patterns in the options markets. And basically, we saw what looked like a very known event heading into this. And I can share this too on I think what you were just saying. I'll just put it in the comments because I know how to do that. If anyone wants to take a look. I'm sharing this one because Dave Lauer actually shared it on his page, and it was kind of a good discussion
indicators, cool.
Numbers on an ongoing basis. But yeah, one of the very interesting things that I saw in addition to
and what moving averages does it use? 921. Can you customize that?
Was I actually saw for the first time ever a lot of swing trading.
I mean, this is more manageable. This is the type of thing I can actually have. It doesn't need to be this one, but I could do this.
I had never seen, but one of our long-term options metrics upside breakout.
We have pretty big lists on this new all-time highs. Look at this.
From the lower end of it to 35. Sorry, the higher end 65 all the way down to 35 at open yesterday, and then it actually went back up to 70. And I've never really seen that volatility on a scale of 2,000 stocks in a long-term signal. So it's very, very interesting behavior, especially on the institutional side from that event. In terms of things I'm seeing on the macro side, I haven't seen QQQ and SPY net option sentiment
Gotcha.
At these levels since kind of early in the year. They're both at average about 50 on the scale. So
921, good. I'll just keep it like that, and we'll see. We'll play around with it. I'll watch it.
That really makes sense to me. I mean, that's been kind of a lot of this year, and leading into last year. Although we have been pretty bullish, just relying on those signals, just seeing where people are betting. But yeah, I mean, I'm kind of looking at I think what some other people are, which is that earnings have been kind of mixed. And then we kind of have this stickier inflation picture. So I have to say that it's kind of just election year bullishness. That's kind of what I put it down to. I don't know what anyone else would say.
Speaking of election year, did you guys see this?
In our options metrics. Now, of course, there's been more
I'll
volatility.
open a tweet deck in a second.
Year, so I could be on here next week and saying that's all kind of...
This is monumental. Today, my administration took a major step to reclassify marijuana from a Schedule I drug to a Schedule III drug. It's an important move.
Yeah. So I'm pretty sure this one would have sent all those MSOS type names higher.
I think that's pretty fair.
Yeah.
Falco, you got thoughts along similar lines here?
Going back.
Yeah, I mean, I try not to get too wrapped up in some of the macro stuff just because it's been...
Ooh, concurrent viewers 11. Welcome. We're listening to the spaces right now.
Yield curve manipulation by the Fed and stuff like that.
I got one more day of looking at this thing nonstop, and then we'll pull away. I promise.
But overall, I mean, I'm really glad to see that the market bounced.
2 new ones up here.
The SPX and SPY right off the gap fill back from February.
500 million.
February, and then making new highs, but doing so with good breadth. You actually have a lot of different sectors that are leading the way. So tech's starting to do a little catch-up trade. But what I find the most interesting is that year-to-date utilities is actually the leading sector, followed by communications. Primarily, that's
no Debo. I didn't look.
And Google, obviously, but then XLF, XLE, all outperforming technology.
It didn't just show up.
I'm glad to see that there's other leaders. I don't want to see them sectors like that leave tech too far behind, because then that's a little more of a flight to safety. Kind of fear being priced into the market. I think. Real estate continues to be a laggard, as well as discretionary. I think that's primarily due to the weighting on Tesla in that one. But overall, I mean, the market looks good. I'm glad that I was hedged on Apple. That allowed me to hold through some of that pullback and keep my Apple position. It's not very large, but
$1.61 well spent.
They're at least trying to announce something. if they don't come out with something, really.
It's like $1.50 plus tax. Is that what it is?
This rally could be a little short, just because the results, while they beat expectations, the results were just down pretty much across the board.
Nice. All right, fair enough. I never had a hot dog from Costco. There was never really a Costco for near me growing up, and then
Amazon or Meta or something like that,
and then yeah, we had a BJ's, which is kind of funny, but oh well. Any big news today? Let's run through it. Debo got a Costco hot dog. First big news story today.
So you had 2020 highs, 2021 highs, and then you had a lot
6 days away from NVIDIA earnings. This is pretty big news. If you missed it, let's play it again.
This is monumental. Today, my administration took a major step to reclassify marijuana from a Schedule I drug
Watch the whole video.
to a Schedule III drug. It's an important move toward reversing long-standing inequities. Today's announcement builds on the work we've already done to pardon a record number of federal offenses for simple possession of marijuana. And it adds to the action we've taken to lift barriers to housing, employment, small business loans, and so much more for tens of thousands of Americans. Look, folks, no one should be in jail merely for using or possessing marijuana, period. Far too many lives have been upended because of failed approach to marijuana, and I'm committed to righting those wrongs. You have my word on it.
There you go. That's a full video.
Short-term gain. And then FIS has actually been a pretty good winner for me. I just found
This was a little interesting. AMD having a good day.
On the breakout of the after earnings, a little 3-day.
If we have any video game fans,
Out of partial on that one, and then looking to hold.
you guys can read this, right?
80, but my stops above break even
Maybe
on that one
one
at this point.
closer.
But yeah, those are a couple of things that I think are interesting.
Let's see.
To me.
Let me let the stream catch up.
Especially the strength in Google after that gap down on the 13th. The fact that stock
Come on.
back, made a higher low from when it sold, gapped up and then sold down from earnings. So that one, that's one of my largest positions, has been for a while. That and Amazon. But Google looks probably the best of all the mega caps at the moment. And yeah, that's what I have going on at the moment.
Very nice. Appreciate the insights there, Falco.
How's that, Paul?
Logical. I saw you said this morning was the most that you've ever traded in pre-market.
New all-time highs.
Yeah. So
Dow Jones 40K
crazy.
for the first time.
I know I've been, I know Shai will hate me for this, but I already told him. But,
Boo! I don't even know what it is.
Okay. I got some new info yesterday, and
Bad
honestly,
news.
I really don't think it changes anything about the upside scenario in Snowflake. But with the earnings around the corner, and honestly, I started looking around.
Walmart
the
over $500 billion market cap for the first time.
That there's a lot of opportunities, and it's funny because I walk into other spaces on Twitter, and they're all talking about how there's nothing to buy in this market, which I think is absolutely incorrect.
There's a couple news stories today.
So right now I've been sort of de-risking my portfolio in several ways, and by trying to reduce leverage in the portfolio, and ultimately just trying to protect a lot of the gains because I've had a pretty stellar year to date. So I just looked around, and even though Snowflake is down 30% recently, I also noticed that several other high quality large cap companies are also down 30%. And I just felt like from a valuation perspective, the opportunity cost was higher in owning Snowflake for the moment, just because there are other opportunities that exist in the market. So I ended up exiting Snowflake for now to revisit at a later time. But right now, I just feel like there's a ton of names that I really like. They're extremely affordable. And so, yeah, I'm focusing there. So a couple names that are interesting, that are down, 30% from the highs recently is Hershey, which right now Cocoa is collapsing.
We're just vibing today.
So I think it's
there really shouldn't be too much big news. We'll see. If something comes out, we'll get it right away. But
is Ulta, which
just hanging out.
At a 14 times 2025.
I was honestly contemplating if I should even go live, but I was like, yeah.
They're buying back a ton of stock at these valuations.
Why not?
It just seems like a layup after seeing it drop 30% in like a month's time. And they're all kind of looking really good on the charts, on the long-term weekly and monthly charts.
Benzinga Pro.
So those two seem like layups from here. with very low downside just because of that valuation is so affordable, and especially for the quality. And then there's another one which I recently started. It's called Kinsale Capital, which is a insurance company. They're a specialty insurer. They're also down about 30%, but this is like a 30% grower, trading at like 20 times next
Debo.
next year's earnings. So just, again, from a valuation perspective, these high quality growth compounders are trading for a discount.
There we go.
And I think that it's just silly. I was also looking at Lulu, but even though it's down, I think it's about like 21 times next 12 months earnings. I think compared to something like Ulta, it's just, it requires fashion and to be in, which is a bit more of a fickle industry. So I felt like the valuations are still a little bit better in other places. Another one is this microcap in Australia, which I started to DCA, and I took a starter the other day. It's called Duratech. They're an industrials play, so DUR on the Australian exchange. The stock is up 15% in the last 2 days, which is crazy. I mean, the stock was down 40% prior to that, and it's an amazing microcap with great management, and it just seems like some short-term stuff, and clearly, the $1 Australian dollar price was too low, so that's nice to see it moving. Today after the bell, I got Despegar.com, which is a Latin American travel, like their booking.com. And honestly, Latin America has been very strong given Mercado Libre and others. It's just going to be interesting because this company is, even though it's up year to date, it's still really cheap. It's trading at like 5 times EBITDA while growing EBITDA by like 28% this year. So it's just a very cheap company. Honestly, I would love to kind of average up maybe here. But, I have a good cost basis, and I've already been buying a ton of stuff, so I'll probably just sit on my hands and watch the print. My PRCT, which is that PROCEPT Biorobotics, it's gone from my cover call. Unfortunate.
I always think of Party City when he says PRCT or whatever he's saying.
Other than that, a lot of moves in the last couple of weeks.
It's Party City.
I'll be posting a portfolio update probably later today, so follow me if you're interested in that kind of thing, and I'll get some more thoughts there. Cheers.
He's bankrupt.
Sweet. Appreciate the rundown.
Cheers.
Logical. Shai, did you have some thoughts on that?
Yeah, I mean, first word that comes to mind is betrayal. I think it's a perfect example of, like, Stock Talk even mentioned it yesterday. It depends on your time horizon. For me specifically, I have no catalyst elements in my portfolio. It's purely long-term investing, 5+ years. So, like, for example, if Snowflake doesn't move for the next 2 years, I'm actually okay with that because I do see them. I know where they're going to be in 5 years. Like, 2 years might be this basing and then explode in 3 years. Sure, that might be the case. My time horizon is just so far out there that I could care less about
Snowflake
the
earnings next Wednesday. I'm excited.
More, knowing that my mentality is long-term investing. So I think it makes sense that if, like, for
same time as NVIDIA,
logical, like in the names you just mentioned, those are mainly
we'll come out right before it.
He's trading those names. Like, he's finding value for the immediate term for a bounce. He might not own these names in 2 years or in a year from now, but he sees the opportunity in 2024. Where for me, I'm looking at opportunities for the rest of the decade. So that difference in mentality, neither of us are wrong, but it just shows you kind of know what you are and, like, totally okay with what you invest in. And that's what happened in this scenario where
NVIDIA next week, Paul. We're here. We're almost here.
And right now, Logical wants to use that capital for some short-term trades. Totally fine. And again, enterprise software has not been the place to be this earnings cycle. And it
I'm excited, man.
Buck that trend. Yeah, I believe so. I do think they're going to. The estimates are like 27% revenue growth for their earnings next week. I do think they come in closer to 30%, and they guide up. That's what I'm underwriting.
Is there a Diddy
but if
stock?
they don't,
it would be big down if there was. I don't want to look.
Quarters of again, the word betrayal, but, like, investors will get pretty cold on Snowflake if they don't really deliver on their guide up, and if they be on their earnings and, like, maintain their guide, they will get punished. This will go in the 120s, in my opinion, or it retests the 150 again. Either way, this could be dead money for the next year or two, and I'm okay with that because I just want to accumulate as much as I can. In the meantime, while, like, I have a DCA plan every week, I put a certain amount of money in my portfolio, and I invest in these long-term winners, and that's my mentality as a long-term growth investor. But besides that, what else caught my eye?
What time frame broke it?
AdTech. I mean, Magnite is for sure the biggest
what time
winner
frame
in
you
the
watching
AdTech names for the Netflix ad platform announcement yesterday. But Trade Desk is showing a ton
hour's
of
not
strength.
too ugly.
Like, I really
not
think
too nice, but like
there's a $100 nice. A magnet for the psychological level for Trade Desk. I think it's going to hit that. Their valuation is getting pretty up there right now, but they just have so many catalysts for the same as so many catalysts. Like AdTech has its.
Shy, my bad. After you're done, can I jump in on Magnite? I forgot to talk about that.
I'll give it to you as my friendship toss, since you betrayed me already. I'll be the winner.
No, I can't believe I forgot to mention
Apple
Magnite.
big week down.
Such a big winner
Stop.
Today. Holy crap! And yesterday was up 10%.
Yeah, broke it. What time frame should I be looking at Micron in your opinion?
Today up another 24%.
You day guy, week guy,
but yeah,
minute guy, second guy?
I've been talking about AdTech for a while, and sorry, I just wanted to put in a comment here. Like, Magnite has been lagging PubMatic, which is why I've actually been going long.
I'll switch over to the Pro one in a second.
Instead of shares, I just feel like it has to do the catch up.
We'll do this.
Since a rising tide will lift all boats. The ad tech market is, on its up cycle, which I've been saying for essentially months. And, Magnite has that CTV exposure based on the acquisitions they've made. So that's why I've diversified my ad tech position with not just PubMatic, which I like more as a company, but Magnite has that, more competitive element in the CTV space, which is really hot right now. And with political campaign ads probably starting up soon, it should see a nice tailwind.
Actually, logical. Quick question. What do you think about the obviously Coinbase is showing a ton of weakness today. Do you think it's more because of CME announcing that product launch today as a potential competitor, and that's why it's kind of, like Coinbase at $200 right now? They're losing some momentum, or is it just profit taking from the run up that Bitcoin had past week? What's your take on what's happening in Coinbase?
Yeah, call me, let me put my tinfoil hat on, but I feel like a lot of the options floor was pinning the 212 number for this week with the monthly options expiration.
Fair enough. We could see this cycle continue. You're waiting. You have to wait for those Nvidia numbers coming out next week.
This month.
I mean, long-term trend is still
is something that
up.
Is short-term in nature. Those results were stellar.
Yeah, I see it.
Go look at the weekly chart of Coinbase. It's
I'll be back in a second, though.
Support
I need to
for going back years. It's at a 20-week moving average support, which has held very well throughout this recent upcycle. It's just a really strong chart. It's putting in a bull flag, and other bull flags have always resulted to the upside. Unless you really believe that this is the end of the crypto cycle, I think that Coinbase is definitely going to go a lot higher. And I just think that it's just on a short-term trading the range sort of stuff. I'm not really thinking any news from CME Group or whatever is. We already had the Bitcoin ETFs. All these things continue to come on board. That's not really why Coinbase wins in the upcycle. Although Bitcoin makes up like maybe a third of its retail trading volume, it's not really, the bread maker. It's going to be a lot of other things, and just an uptick of crypto volumes throughout this cycle, which I personally don't believe we're near a top, given the past two cycles, Bitcoin peaked, 12 to 18 months after the halving. So and we haven't even seen rate cuts, which typically make risk assets go a little bit higher. So, I think it's a very good setup. It's been consolidating just below the highs for the last 2 months. It kind of broke out of its last monthly downtrend yesterday. I would love to see a retest 63K and push back higher. That would be very bullish. I'm not too concerned about Coinbase. They're going to continue to make money as long as crypto stays strong, which I think will keep happening. I added to my position, by the way, today, just a little bit.
Interesting. Yeah, crypto way more than me. I do think the CME, like being the largest futures exchange, launching Bitcoin, that could be a near-term headwind just because of the competitive nature of cutting fees might come to play if there's more competition. But again, I'm just a total crypto noob. I could be just talking on my ass, not my lane. But yeah, I'll pass it back to you, Goff.
Yeah, Brett, I remembered you sent me that message, so I want to get over to you ASAP here so you have some time to cover your thoughts.
Yeah, I really appreciate that. Just kind of tying crypto crypto and equities together, they tend to perform, especially when you look at like Bitcoin versus technology stocks. Crypto tends to be somewhat of a leader here when it comes to like risk on assets. And to see such a positive reaction out of it on Wednesday was really promising and really not that surprising. It's been consolidating for so long after hitting those highs a couple months ago, and to see such a positive reaction to it, I think just kind of speaks, and alongside obviously S&P, NASDAQ, and a lot of other indices, and that that risk on rally is really taking place.
Probably some news.
More so, I mean, obviously our conversation tends to be around the assets that affect us the most, the NASDAQ, the S&P, Bitcoin, whatnot, but we're seeing strength really across the board. I mean, it's the DAX in Germany, it's multiple indices in Europe, it's the Nikkei, so we're just seeing like a lot of really constructive action, and I think that speaks really highly to the people that weren't out of position going into the pullback last month, and we're not over leveraged, and we're in a position to think kind of calmly through the pullback and realize, hey, we've run a long way. A mild correction here makes sense, and use that opportunity to put capital back to work. And I think longer term, intermediate term, I think that the environment still looks pretty constructive here for equities. But maybe in the short term, you could definitely argue it looks a little tired. I think SPY's up 10 days in a row at this point, even though it's a couple of those up days are 0.01% gainers. But longer term, I think the environment still looks really good. It's no longer just a handful of names that are leading the way. We're seeing really solid rotation, and that's giving investors a lot of different opportunities to move from one industry or one sector to the next. And you can do that on a larger basis, like a sector basis, or on the individual front. And even semiconductors, you would think that they would have been maybe the first one to give an opportunity. But even just yesterday, we saw such promise, or yesterday and Tuesday, such good price action.
Big pump in the morning. Pump in the morning didn't really do much after that.
SMH, those names had not necessarily been.
This is interesting though.
Working for weeks on end, or ignored the sell-off, and so I guess my point is there's always an opportunity around if you're willing to maybe move the binoculars around a little bit and go outside of your normal scope or the normal couple names you trade. And I was just doing some sector analysis today, and 6 out of the 11, more than half of the S&P sectors are up more than 10% on the year. That's utilities, communications, tech, industrials, financials, and energy. And it's maybe a little annoying for the people that listen to this on a regular basis, but I keep saying it's hard for me to be that bearish with industrials, financials, and semiconductors trading so well at this point.
That's people do decent.
I continue to kind of look at the market that way.
Nice.
And I think, we might be a little tired in the short term, but that's not me saying, oh, I think, we're going to roll back over and, come back to play in Q4. I just think, if we do get some kind of cool off here for a couple days, then it's just going to set up more opportunities. The market doesn't always go up, but as you look around and you look for these rotations, it continues to take place. And in terms of what's jumping out immediately as a catalyst, well, yesterday's CPI and retail sales prints were kind of the catalyst. But as we look to next week, it shifts to Nvidia and how much this space has gone from a hype trade or an AI trade where it was sort of the hot money. It's also settled into being really good businesses, and a lot of these. Some names do have stretch valuations without question, but some of them have pretty reasonable valuations. And,
outright.
They're not just, AMC and GameStop and those types of names garnered so much attention recently.
Let's continue scrolling.
With the price action we've seen and the short squeezes and whatnot. But, the AI and the chip trade isn't so much hype, but it's substance. It's, when you look at Nvidia and Taiwan Semi, you combine those two together, their market cap's $3 trillion. That's a really significant chunk of market cap. That's a really big. I remember when you would combine all of FANG and it wasn't $3 trillion. So, to have just these two names make up such a significant amount, throw in, the next, Advanced Micro, Broadcom, and ASML, you're almost up to $4.5 trillion in market cap. So, this space has become
Interesting.
super significant,
NQ
super
lower day,
important,
really?
not just for sentiment and psychology, but from the
Damn.
perspective of it
I
actually
thought
has
market
really
was doing okay.
significant weighting in the U.S. indices. So that's where I'm going to kind of have my focus on the next couple of days. I'm going to continue to look for rotation, continue to look for opportunities and names that are resetting.
Volume has been low, and I guess we've been distracted by GME. That's kind of a boring time.
And just trying to stay on the train as long as it's going to keep going forward. And the only other thing I'm watching are bonds. Bonds in the 10-year. TLT is kind of trading into a key area here. It kind of faded off today's highs quite a bit. So keep an eye on that. I want to see bonds continue to move higher and, thus yields move lower. And I think that could be another tailwind for equities, but it's something we have to keep an eye on.
Yeah, George.
Yeah, I agree with a lot of what you just said. The one thing that I actually wanted to jump in on in terms of, I just think the chips, the AI trade, I'm a little disappointed that
some of the stocks are hitting all-time highs today. Any of these guys interesting for you? I changed it to tickers so I can include the indexes.
No, I'm mostly joking on that. But what I actually saw yesterday in some of the chips, and I actually got in right after CPI to SMCI, had a really good day on that. But something that I am looking out for on the meme stock side
one
is
lower.
I do think,
There should be one lower.
Both, institutional and retail profits as this thing hopefully, gets over and doesn't kind of draw out. Like, that's actually why I bought SMCI yesterday, because I actually saw it spiking up pretty well in social sentiment. And I said, hey, if it's spiking in social sentiment, I'm expecting a really good day. So, I think that's one thing to look at in the short term, other than, the big NVIDIA announcement. That's one thing I'm looking at a lot. Maybe social sentiment spiking, which I don't actually normally care about. That's rarely, sometimes it's a support, but it's rarely a trade trigger for me. But it was
just got too expensive.
Because
that's what they're saying.
Things were the way
it did too good.
I run screeners and everything like that. SMCI was already looking good, but sometimes the dark pool and the short pressure gets a little too high for my taste. That's kind of when I exit, and I'm generally playing a lot. It's been my most used position this year. I think I've been in and out probably
No, I think I've seen
10 times. But no, I agree. Yeah. I agree with everything that was said in terms of the chips AI trade just continuing to look very, very attractive. And we were talking about it here last week. It's just you could make the argument that it might be a little overpriced, but given the growth rates and the profitability of these companies starting to get to be so excellent, I think it's really hard to argue against it as a short or long-term short-term trade or a long-term investment these days. That's what I'm pretty much looking at by default until otherwise.
Yeah, well put. Mitch, I see in the audience along with Kirk. If you guys want to hit that request button, I can get you both up on stage. Stock Talk, are you in a better spot now to maybe share some of those thoughts?
Oh, yeah, I don't know. I was just dealing with Leo because he came in and it was raining outside and he came in super wet and just was being crazy. But yeah, great day today. I mean, again, it's kind of, when we have index days like this, a lot of people are focused on the indexes. For me as an individual stock trader, it's just more about whether the individual ideas are working or not. Today, there was actually a ton of really great sell-side reports this morning. Usually, so we have a couple different research desks in our community. The one that we post in every single day is our sell-side desk, where, like I've mentioned before, we pick a handful of stocks from sell-side research every day that we think is notable and we think will move those equities. We usually pick 2 to 3 max. Today, we picked 5. And so I'll go over some of those names and what was said on each of them. But the first one was a ticker that probably maybe not a lot of people are familiar with. Ticker is NATL. It's a spin-off from NCR's original business. They're a custom computer programming service. It's about a $2 billion market cap. Stock's up 8% today. Again, when we post these ideas, we always post them 30 minutes prior to open. So when we posted the idea, it was actually red in pre-market. It was down about 0.5%. But anyway, NTLA had a report from D.A. Davidson this morning, new street high, price target raised to $48. And this morning the stock was trading in pre-market 26. So anything with that much upside we usually pay attention to. But the report was actually very good. And so I'll read a little tidbit here. It said, following NATL's Q1 2024 results and our subsequent model update, we have made surgical adjustments to our revenue outlook and our adjusted EBITDA estimates for 2024 and 2025. Segment level KPIs continue to demonstrate solid underlying business fundamentals across both main segments, self-service banking and network, setting the stage for an improved top and bottom line performance in 2024, despite known and previously communicated headwinds associated with their transition. So this was basically a simple fundamental view that D.A. Davidson was taking, that the market was just mispricing this stock based on previously outlined headwinds in the last 2 quarters, and they think ARPU expansion is going to more than accommodate.
Which one do you think looks better? This one,
the network side of their business,
or this one?
So that stock, again, what we try to look for is stories that are going.
This one's OpenAI. This one is Google.
That we think will move in the regular session. That's what we go for on these daily sell side lists. And so this was a perfect example of that, where there was absolutely no attention on the stock at pre-market. In fact,
normal
it was red in pre-market, and then when the bell opened, you started to catch a bid, and this thing trended up basically all day.
I should my
it went up
on
a
the
couple
stream.
percent at the open and kept going and kept
on
going.
The stream.
It's going to close up about 8%. The second name was Coupang, which is a name that we've visited many times. We've come back and forth and traded it many times. But this was another good note this morning that we thought from UBS. Now, this stock popped big off the open, about 5%, but then cooled off.
Yeah, not
the
the
rest
best
of the
day
market.
for views.
Probably going to close up about 2%, but still green on a
Apple trying to come back a little bit.
Day for the indexes, but the
Google,
second from the note that's good here.
I agree, honestly.
We view Coupang as a leader
I like Google better.
in the 124 billion Korean e-commerce market.
Just the aesthetics.
With 30% market share, which we expect to
Events,
increase
pretty
to 43%
events.
by 2026. Our analysis suggests that the market may be underestimating Coupang's abilities to rapidly gain market share and overlooking its expanding portfolio and strong logistics network. They're forecasting a 21% CAGR between 2023 and 2026 on the top line growth of Coupang's business. That would result in roughly a 45 to 50% market share of Korean e-commerce by 2026. So they think the market's underestimating the growth potential for that name. That was a nice pop. The other 3 were really big movers. The other 3 were all double-digit movers intraday. The first being EXTR. Now, this was a really interesting Craig Hallam note because it was actually a sympathy trading note, which is really rare.
These are the earnings
from an analyst standpoint. But Craig Hallam
Cloud
basically
Materials.
said, based on the strong Cisco quarter, that EXTR should catch a bid. That was basically the bottom line point of the note.
You might be able to see this.
They did.
over
Another stock
here.
that was relatively flat pre-market is up by 2.5%. And is going to close the day out.
6.11 billion. Also from Take Two.
Very little volatility in
405.
response to the indexes. So
earnings.
Again, that's what we look for when we're trading catalysts: is the ability to be resilient in front of the indexes. Then we also had TRUP on the list this morning. Now, this is a stock that is quite a controversial name, and there's quite a big short presence around it and a lot of short theses. But sometimes that makes us like a stock in the short term. We trade a lot of stocks with high short interest.
That's how I say
because
it.
they get set up for explosive moves. So I've talked about my favorite shops on the street before. I've talked about Raymond James being
Cloud Materials,
my favorite.
Take Two is what I'm
second
watching.
favorite, Bank of America. They're just a high quality shop. Bank of America does good research, especially compared to their other tier 1 peers. And so B of A came out this morning.
Oh yeah, trash earnings.
And me and Steve,
according to Charlie
literally
Munger.
in pre-market, when we're going over our research, we're like,
oh, is that what you're trying to say, Ollie?
Typo. We both went and checked, and sure enough, it was Bank of America upgraded.
If it was, that was way over my head.
A $49 price target. And so this is their note. I thought it was interesting this morning, but
market on close balance 3.4 billion on the buy side. I don't know if that matters, but
today.
There it is.
But they wrote, insurance is a cyclical industry where pricing is a lagging function of loss trends. During extremes, these cyclical patterns can be more pronounced. The inflationary spike of 2021 to 2023 was essentially unprecedented since the 1970s. When inflation accelerates more than anticipated, underwriting margins deteriorate, insurers must raise the price of risk to restore margins. Other times, insurers overshoot the pricing mark with reactionary price increases as they attempt to combat periods of under-earning. We believe that period of under-earning will quickly transition to over-earning. So they had a very simple thesis about a shift
in the
margin profile of the insurance business as we come out of the inflationary trend. And they think this is a passive beneficiary of that. And, big price target raised from them to go from 30 to 49 overnight. And again, with 40% short interest, you're going to get an explosive move. So that's why we listed that name there. And the last name was GoodRx, which actually had 2 reports this morning. GoodRx is a name I've traded very frequently. In fact, I've traded it probably about 8 or 9 times in the past 2 years. It is an excellent trading vehicle. I mean, I love this stock. Haven't had a losing trade on it yet. It's very responsive to catalysts. Every stock is.
Can you tell me if the market closed balance is a closed or open
we
position
keep mental
matrix?
Notes and try to journal to an extent the stocks that are.
It depends on what it is. If it's the market on close,
every time
on the buy side, then it's buying. If it's
works
if it's on the buy side, then it's open. If it's on the sell side, it's closed. Would be my guess.
James, which I just mentioned, my favorite shop.
You drive right now. I got you, Ollie. I'll call it out. I'll call it how they move.
Tends to be more conservative with their price targets. They're a little bit more of a professional shop. But TD also jumped in this morning, raised their PT to 16, so significantly higher than Raymond's PT, and obviously significantly higher than the current share price.
Closer.
So this stock's up about 12% today. But here, I'll read an excerpt from Raymond's note, which I thought was excellent. They say that while they have been skeptical of the GoodRx story over the last 2 years, and by the way, Raymond has had it at an underperform for about a year and a half, then raised it to a neutral, and is just now raising it to outperform. Those are my favorite Raymond James
notes.
Live earnings. Here
we go.
And they have been bearish on something, and then they shift their opinion based on changing data. That's a great signal in an analyst note to tell you that the opinion is genuine. And they're not just selling you something or looking to push a stock. That's a great signal to look for, is when a note starts with an analyst conceding that they used to be bearish on a name and they're flipping bullish. So he starts with that at the start of the note and says that new management has brought a renewed focus to the business, and they are prioritizing creating a symbiotic relationship between the retail network and the core business. And so they think that re-accelerating revenue, improving margins, a better management team, more focused business strategy, and an attractive valuation are all more than enough reason for an upgrade. They think their pharma solutions business, they have a pharma manufacturing solutions business. They think the growth opportunity there is being completely overlooked by the market. And they think there's additional upside from obviously categories like GLP-1s, which has been a huge theme, and specialty drugs. So
it is monthly OPEX tomorrow. That is important to keep an eye on.
And then kind of like corrected back down to the base several times. In fact, it went on a monster run in February and March from like the 6s to the 8s, and then got faded back to the base. But, I think to an extent, this thing's making a base that's just setting higher highs as we go up and higher lows. And so, I think if you look at the actions since January of this year, I think it's, overall bullish. And, I think you can see this thing trend higher over time, especially if the fundamentals start supporting a lot of these analyst opinions. I think the 950 spot on this stock, just technically speaking, is going to be a huge barrier. But, look at the range this thing has if it can get out of this multi-year base, right? Going back to 2022, this thing has been stuck in this multi-year base, right? So for 2 years, it's been building this base. And you're talking about a stock that in 2021 was a $50 stock. It's an $8 stock today. So, yeah.
Raymond James, I think I sound more boring or like down than I normally do. It's just been a long day.
I'm actually swinging.
Live,
I don't typically
we're chilling, we're vibing.
Too many sell side plays. A lot of them are day trades for me. But I always share with our members when I do swing. I'm actually swinging some of that from today.
These are the days I
have
need
a nice
music
cushion
in here.
on the position already, so that makes it easier. But I am swinging some of that from today. So those were our 5 picks from today. And then the other one I'll mention is one that I've liked for a long time. That Logical has also liked for a long time. I actually took a position on it for the first time about a year ago. I was underwater on that position, full disclosure. Not everything wins instantly. But Magnite, had great news yesterday. And what I try to look for is inflections in behavior. And so I put out a note last night for our members. I was looking at the Magnite chart yesterday. It posted a huge daily candle from a volume standpoint yesterday, which had me curious because it has not been posting a lot of volume for months. And So that made me
I don't really know
feel
much about
like
the market on Close,
yesterday's
honestly.
news
I don't
had
follow it too much.
reinvigorated some
I don't post
institutional
about it.
interest. So that's why I posted that note last night for our members. And
I've thought about
sure
it on
enough, the
big
stock
ones,
was up
but
about 10% in pre-market today, exploded to being up 30% higher. This is a name that I think is high risk, but also very high reward. I think they're going to benefit from an enormous amount of continued secular tailwinds in the digital ad market.
Kevin's away for actually a couple weeks now, unfortunately. He's went on a big trip.
It's kind of a, like I said, a high
Kevin
RR
went on
bet.
an Alaskan
And I like taking those types
fishing
of
trip
bets. So
for like 3 weeks, 4 weeks.
In the green on that
So we were not here, Kevin, for a
after
month.
holding it for a few months, but
Pain.
I think there's a lot more upside for that stock if they can continue to show some fundamental improvement over the next few quarters.
I may try and talk with Amit.
Their last quarter they reported they had a nice gap up off it, but it just got faded with the market, and I think that gap up probably deserved to hold on this name, and so you're seeing a little bit of what I think is a deserved pop today off of some really good news with Netflix yesterday.
He'll be back, though. He'll be back.
A bunch of stocks that we're looking at and trading, and it's been fun. It's been a fun week. It's the last 2 weeks have been my best 2 weeks of the year easily, and probably one of my best 2 week periods ever. So we've had a lot of fun. Logical, what's going on?
I wanted to note another thing about Magnite, PubMatic, Trade Desk, all of the open internet outside the walled garden ad tech players. Another call option for the next year or two is essentially the Google antitrust case for their ad tech platform.
I'm jealous of the trip. Right, that's awesome. Fishing trip in Alaska.
I'm not sure when
that sounds
exactly
cool.
starts, but it'll be starting.
I'm not like a massive fishing guy, but that does sound like fun.
If the courts rule against Google, I mean, it just makes a lot more inventory that goes to Google open for these open internet players. There's a guy on Twitter, I forgot his name, we follow each other, but he wrote a 26-page paper on exactly that and, what that would look like if that played out, even if like a small percentage of those sales were now up for grabs. I mean, the amount of revenues, and with Magnite and PubMatic being the only sell-side players to kind of manage that, the amount of revenue would be, multiples of the market caps of these, small cap companies. So that's
2 minutes to close. 2 minutes to close. Applied materials should be out pretty quick. Ollie wanted Marvell up as well. We'll talk about it. Let me move the spaces down
in 2023, starting there and continuing to add to it. And that was a big part of the story, is because I mean, if you end up being right, and again,
people are planning an NFL trip to go watch games. Ooh, yeah, Paul, I really want to go to a game this season. I'm going.
The thing about these though,
I need a double
time on them. So today, when I was trimming a couple of these Jan 25 calls at over 100%, actually, like when I added them on April 19, these were, and that was the low. These are long-term options that we're seeing those kinds of gains on, because I've probably mentioned it on this space before. When you're dealing with small caps, it's all news-driven. It's not something like that has high liquidity.
San Francisco, Minnesota, eh?
Like, no, these are typically like going to move big when they move. And so if you
Pittsburgh in October,
an upcycle in some of these
Jacksonville in December.
Seeing revenues reaccelerate in the business cycle.
Doesn't sound horrible.
Incredible tailwinds this year. Like we saw.
Oh, it's gonna say Miami in December. Sounds even more optimal.
The bottom of the ad cycle after a 2-year recession starting in January 2022. They had peak earnings in Q4 2021. I've been watching it since. But yeah, so ad market reheating up. There's call options galore on now a Netflix partnership and open up CTV into
market's closed.
Inventory, and then
all right.
The Google case, and then you have
the
2024 election year.
Take two with a big wake up. Let's see if that's actually real.
Start from these low valuations. So yeah, it's just a good play overall.
Yeah. Sometimes when sometimes it's really like straightforward with
Applied Materials, big wake down.
Secular trends, like, I feel the same way about like semiconductors. There were a lot of people over the last few years that were resistant to semiconductors because of their previously cyclical nature, and they're getting less and less cyclical by the day. The same thing goes for so many other
numbers.
Essential markets. And the digital ad market, I mean, it has literally limitless tailwinds. I mean, everything is becoming digitized, and more of these massive mega tech companies are looking for ways to monetize digital content.
I don't see the numbers, but the stock is moving.
No-brainer.
Oh, this could just be a fake move.
For so many of them. I mean, Netflix is now looking to make an in-house
Take-Two also a little spike.
2025. You're talking about basically all of the wealthiest and most capital.
Oh yeah, it's getting bought back up. I wonder if that's just a fake candle.
Capitally rich companies in the world that are investing in this trend and accelerating this trend. So digital ads, cloud, e-commerce, these are things that are not going away. They're not going to stop growing. E-commerce growth has so much runway.
Digital ad has
numbers so much runway. Non-linear TV has so much runway. Like when you have a 20-mile long road ahead of you in these trends, fading them is just stupid.
Arizona could be fun.
You, man. What do you think can we estimate what Netflix's ad revenue will look like?
Jets Ravens?
Because I feel like it would be monstrous.
You'd have to,
it's
early innings to do that. But you could
6.65 billion. Wall Street wanted 6.11. That looks like a beat. EPS of $2.09, beating expectations of $1.86. Let me double check the
money they're gonna make on ads. Same with all the e-commerce companies like the C Limiteds and Mercado Libres. All these e-commerce platforms are making
6.54
off the ads, which is high margins for them. So
$1.99.
I do think
beat 6.54. Beat.
The TAM for these ad tech players.
Really quickly, sorry to interrupt. Applied Materials earnings did just come out. Revenue was $6.65 billion, which was a beat on expectations of $6.54, and then EPS was $2.09, which was a beat on expectations of $1.99. Stock with a little move higher. I'm not gonna have just quite yet exactly how that compares, but there is some outlook in here. 6.65 billion plus or minus 400 million there for guide next quarter, and then EPS between $1.83 to $2.19. But I need to see what the estimates were. That was AMAT. It's kind of back to unchanged here. Sorry for interrupting the conversation. You guys can continue.
No worries. Shit, I lost my train of thought. Stock talk, I'll pass it to you because I know I interrupted you in the beginning.
Chain of interruptions. It happens.
No, you're good. I mostly finished my point. I just think that, there's some trends that just don't really have a logical reason to cease trending. And that is especially true with technology. And this is partially why, again, go for it, Evan. I imagine you have another.
Sorry, no. I'm keep going.
I was just saying that's partially why I get so frustrated with technology skeptics, because this idea of being a technology skeptic is easy. That's the first thing I'll say. When a trend is new or a technology is new, it is easy to say, oh, well, that's not perfect yet, or it's not working, or it's not working as expected, or it could be better. It's super easy to be a technology critic in early stages. But it is remarkably stupid to be a technology critic when a technology is scaling and maturing, because almost unequivocally, when that happens, the technology matures and becomes a massive industry. In almost every case you can think of in the last 20 years where you had a mature marketplace of competing companies in a technological industry, they've become behemoths. Every single one.
And Marvell moving lower, like 20 cents.
E-commerce or cloud.
Applied Materials not even really
digital
moving.
Ads is insanity to me. It's just frankly insanity. I would never do it. But on the point that you were making earlier, Logical, about estimating the revenues, I don't think we can directly estimate the revenues to the point that Shai made. But there
forward
was a
guide
note
looks
this
a little
morning.
bit above expectations.
There was a note this morning about that. Let me find it.
Yeah, so we moved Ulta Beauty to report on May 30th.
Okay, give me a couple seconds and I'll find it, but go for it. Go ahead.
I was just going to say, one more thing about the Magnite bull case that's a call option, again, because there's call options galore, is if you know the business models of PubMatic versus Magnite,
paper
gains. Peers on the supply side of the ad tech, opposite to the trade desk. PubMatic is founder-led. They have had organic growth. They have a clean balance sheet, no debt, net cash position, all that good stuff. Magnite is the opposite.
Staying 2 games in Florida away at the end, nice.
They have inorganic growth through acquisitions. They have a lot of
these games are right on the cusp where I still might be down.
So another, basically call option on Magnite is if we do end up seeing rate cuts
opening day. Did someone say opening day in San Francisco?
They're going to be able to refi that debt, and they are a cash flowing machine. So just expect, an unexpected bump in cash flow once that interest expense comes down. So that's another thing.
Yeah, okay, so I found the note here. It's from Citi. So they're at 40 million MAUs on the ad tier, right? And based on the 2023 numbers, that's a growth of roughly 4.3 million MAUs per month. So, I mean, I don't know if you can just extrapolate that, linearly. I mean, they probably can't. But they said 40% of new signups are joining ad tier. So 40% of new signups ad tier, 40 million total, 4.3 million per month. It's going to be a huge advertising business. It's going to be really difficult to estimate the numbers, like Josh said.
I just wanted to touch on Logical's point.
Anyway,
but just real quick, Magnite. I actually happen to grow up with Magnite CEO's daughter and know him very well. His background is insane. He's the founder of AdMeld,
What's up,
which is the product
nice.
that Google bought
Very cool.
to build DoubleClick that they use today. That powers all of their digital tech. Right? He had built one of the first digital.
You gotta
ad
take care of
exchanges,
the.
right?
Got to take care of it.
Today.
But I'd like to go to a couple games if we're good.
They bought AdMeld and DoubleClick and put them together to build the Google ads that we see today.
That's amazing.
He went from there to Google to Yahoo. He became the CRO of Yahoo. He has a background and a half. Michael Barrett is his name. A brilliant man.
That's amazing. I think a lot of people talk about PubMatic's management just because they come from there's 4 founders and they're still kind of associated with the company. The 2 brothers founded it with a couple others. And it's just, you always hear about their management, the organic growth, and all the founder-led stuff. But then, Magnite, that's an impressive resume for sure to be.
He's probably the most successful at execution of anyone that I know and anyone I've ever met in my life.
Dude, you're getting
He's always felt that he always felt like he was anywhere he went for the next thing. He only left if it was because there was something else that he can actually do to do better. Never because the job was better. It was well, I can make that thing a lot better than I can make this thing, so I'm going to go there kind of thing. And then because he left his role as chief revenue officer of Yahoo in first 12 months because he went to a smaller firm they could actually make much larger impact. It didn't excite him anymore.
EPS.
So the idea that he wants
revenue was a miss.
A while back was I can imagine knowing him so well that it's his excitement role again, right? He gets to do something and build something and compete against people in a space that he does know really, really, really well, right? From its beginning.
No, I mean, he put the,
vision
together, glued it together with all these different acquisitions. And
Take 2 to Wick as well.
PubMatic is their peer.
Wick down to
on
120,
the ad tech
jeez.
side. PubMatic has zero skin in the game when it comes to
Look out below for Take 2, question mark?
Not the go-to in that space, and clearly it's growing. Inventory is going to be huge. And, again, we were talking about those big Netflix revenue numbers on the ad business. I mean, just think about them getting a percentage of that. Even if it's 5%.
On top, to add to that, media ads. He ran Fox Media advertisement business for Rupert Murdoch for 10 years as well. As the head of digital ads at Fox. He's done a lot of advertisement work. So the idea that there's business relationships too that eventually extend beyond having built the product side. I've been looking and waiting to see where some of those old contacts and stuff in media might come in because he ran, a media network's entire digital ad. So I would imagine that there's a lot of, people still networked in there that today probably are on the streaming side of some sort, but provide Magnite and provide, some leverage there.
Thanks for the color on that, man. That's great. I'm already getting too excited, but I've been feeling pretty. I feel vindicated a little bit today on this, because just say validated. Just because it's been trading horribly. The ad market has been doing well. PubMatic, its peer, has been clearly doing well. I don't know what it is. Maybe it's higher for longer. This company is riddled with a little bit of debt. Clearly manageable from a cash flow perspective. I just, I don't know. I expected more from the stock, and I'm glad we're finally starting to see it wake up. And again, these small caps trade on news, and once institutions get a little bit interested. And lucky for us, being the small cap retail investors, we can kind of get to these positions before they can. And if they want a position, typically it requires paying a premium because the volumes are so low and the liquidity is low, and so they can't just be in and out of this stock. Once they're in, they're in. But that's obviously a double-edged sword. If they want out, they can also drag the price down. So it's just something to note. But I mean, these are cyclicals, and we're clearly on the way up. So it should be a fun ride.
Yep, I agree. Paper, what's up going on, buddy?
What's going on, man? Just watching the close today. Just hopped in for a little bit. We're going to do a class here shortly, but figured I'd stop by and say what's going on. But I always hate seeing these breaches of all-time highs in the market close down the lows. So I think we're in for a little pullback right now. I'm sad to admit that today I actually bought puts on my Snowflake.
Ban him from the space. Get him out. Disgusting.
I know.
Kick him.
She looks so good at the close, and every time she looks this good at the close, she does me dirty.
Disgusting.
So I'm going to front run it this time.
Ban him. Ban him. Ban him. I don't know. That's crazy. We were getting mad at Logical earlier for just trimming down some. Paper is short it.
No, I'm not short. It's I'm long equity. I'm short via option.
He's hedging. He's essentially hedging himself for the next week is my bets.
I kind of enjoy booing him though, so I'm gonna not accept that. But we can continue the conversation.
Now I know how SoFi investors feel being
I feel like we have to boo on Shy for the Celsius talk earlier, man. I don't know. I love my Celsius, but I will.
I love it, dude. I drink one can a day. It's just purely valuation. I think it's overvalued.
Yeah, no, I actually, whoever we were talking to, sorry, I'm backtracking, but we were on a space earlier with Savvy and talking about Celsius, and yeah, I do think, look, the guy was talking, I think it was Chris, said he was waiting for a dip. I'm like, we got a 35% dip post that last earnings. I bought it, but it has rallied to a very difficult level here, so we'll see. Did we, and I did sell some upside calls on it, did we cover AMAT earnings? Looks like they're out. I don't know if you guys did that already.
Yeah, we just touched on it a little bit. Looks like some decent numbers across the board for the most part. I need to get back in front of me. EPS is a beat. Revenue, I saw it as that's a beat. Forward guidance also looks above expectations too. So I don't know. Last I checked, it was moving lower. Yes, it is. Seemed like decent numbers there. Maybe there's something underlying. Monative, we got him down below. I know he has some expertise in spaces similar to such, so maybe he can give thoughts there, but looked like decent numbers from my perspective. You have any thoughts, Paper?
No, that's what I was just looking for you guys if you had covered it yet. I just saw it start moving, but it's very wiki all over the place. If it was going to be, because I was looking at the market, I was saying Applied Materials was going to needed to be the one to save it for tomorrow, because I think we have OpEx tomorrow too, so it could I'm braced for a nice little pullback. It's been a good run, but it's sketchy close today.
I'm also seeing some headlines around GTA 5 that 6 it might be coming in fall 2025. Take-Two.
Yeah, they had earnings. Oh, yeah, they just reported also.
Hey, Logical Monative just sent me something for Netflix ad revenue projections. He says the projections for 2024 are $1 billion and 2027 are $4 billion.
Okay, good to know. I thought it'd be higher, but yeah, $4 billion by next year, that's a ramp.
2027, so 2 years, but yeah, 3 years.
Gotcha.
Stock Talk, were you watching any of the MSOS or any of the weed names today? Biden put out a video around midday kind of talking about another step the DOJ is doing to reclassify to Schedule 3. I saw a little pump and a pullback.
He posted about it.
This is a multi-stage process. What was announced a few weeks ago, it's a multi-stage process. So this is really it's just a follow-up from the Department of Justice on what the DEA announced. So this is simply just them posting what's called a notice of proposed rulemaking. But yeah, I mean, it's basically a done deal. It will be reclassified at this juncture. Once the Department of Justice posts that notice of proposed rulemaking, within, I don't know what the time frame is, but within a few months, it'll be officially reclassified. So yeah, I mean, look, I don't have a position in those marijuana names. If you're a very good short-term trader, you can make some nice trades on them, I guess. I think the maturation of the U.S. marijuana industry is going to be quite a long process. I also think rescheduling is an entirely different catalyst than something like federal legalization, for example, or even less than that, even just successive states legalizing it. Federal legalization is when I may get interested, but my thinking is at that juncture, most of these stocks will probably be valued pretty excessively, but I don't know. I'm just not really interested in that space at this time. I don't own any of the weed stocks. I'm not gung-ho about them, but if you're a really good short-term trader, can you make some nice trades when the news drops on those names? Yeah, I guess, sure.
So, sorry, can I butt in real quick? Earnings results. Despigard.com. Holy crap, I wish I read this release immediately. The numbers looked a little funky on the top line, but when I look into it, it's all FX headwinds. It says gross bookings increased 12%, but on an FX neutral basis, 42% year over year. FX neutral basis, revenues grew 36% year over year. Mind you, this is a stock that went into this print at a 5 times enterprise value to EBITDA multiple. That is insane. I should probably buy more of this thing. Holy moly.
This stock has been an absolute beast. I've traded it a few times. I wish I had longer-term shares on it, but we traded it a couple times earlier in the year. But this thing has been a beast. I mean, year-to-date, stock's up 42%.
Video game stuff doesn't do that well on my page, unfortunately. But I'm excited for GTA.
It's coming to the top of this range now as well after that after-hours move.
What's the ticker again?
DSP. The Latin American online travel company. Think of it as kind of like Latin American analogous to the U.S. travel companies.
Hey, Paper, you were asking about Applied. I was just reading through that while you were asking. The guide is not particularly awesome. It's a very wide, range. It's slightly above the midpoint is slightly above the analysts, but it's a massive range on revenue. It's a 400 million range, and on EPS it's what is it? 83 to 19, 17, 36 cent range. So I don't know. I mean, I guess they're really hedging their bets, but it's a very large range, so it could come wide enough to drive a bus through.
You think they're sandbagging? Is that what you're saying?
Yeah, totally.
Yeah, I gotcha. This revenue, I'm looking at the revenue, it looks pretty flat too. I don't know.
Yeah, look, they have a large DRAM, equipment business, so that should start again, right? Remember, all these numbers are without a pickup in PC market and sort of a flattish, phone chip market, right? So any pickup in any of those will dramatically help a lot of players in the industry, including the DRAM suppliers or DRAM equipment suppliers.
Don't watch out for this
Lam or some of the bigger ones there, so they should benefit. I think that's why they're sandbagging, is they don't see a huge pickup in that market yet, but how long away can it be? I mean, those old PCs are about as useful as doorstops soon.
Yeah, I think we'd probably be coming up to a refresh cycle pretty soon. I'm not really close to the pulse anymore, but probably that next year, if not this year.
Ooh, baby crying in the background. You guys hear that?
That's my guess too. Definitely next year, if not starting this year. So we'll see. But I think that's why they're sandbagging estimates.
Yeah, it's not horrible. I mean, it looks down a lot today, but honestly, it's basically sitting at yesterday's open, so it really hasn't moved a whole lot.
No, I mean, look, if that range was smaller, it would have been a small upside in the guidance, and that would have been fine. It's just because the range is so wide that there's probably doubts in the market. That's it. This is not a real problem, right? It's just the company being careful. That's all. I don't see any issues here. Otherwise, the report looks nice.
Appreciate it, Montez.
Operating margin is actually up compared to last year. It's up, let's say, 1.5%, 1.6%. So 160 basis points is very good. Non-GAAP margin is up much less, but operating margin is up 150 basis points. And
I wonder what Activision Microsoft COD user base numbers will be like once it drops, because I want to play COD when GTA 6 drops. Yeah, I agree. At least for a couple days and a couple weeks. We'll see how long it sticks.
Yeah.
The market needs another really good game, though. I'm excited.
Foundry Logic net revenue is down, but DRAM net revenue is up 32%. Flash memory is flat. So basically, yeah, Foundry and Logic and others. So it is also possible that they had a lot of, demand brought forward in the recent years that they might actually have a slowdown. Now I have to dig in a little deeper into this. Let me listen to their call, and I will probably come back. Maybe Monday we can talk.
Nice.
Yeah, I mean, I think one thing to keep in mind with AMAT is like there is some industry read through, but not to the degree that their peers have. I mean, AMAT doesn't have to post an amazing quarter for the GPU theme to remain intact. You know, they're not as relevant to that as most of their peers. So that's just something to be mindful of. Yeah, but it's not a terrible quarter either way. One story from today that I thought was
I hate when I have something and I forget about it.
But I tweeted a summary of it today. I'll pin it at the top for people that are interested in type of next gen energy type of stuff. But this is really remarkable, and actually probably the most shocking thing I've read in maybe the last month. Battery energy storage is going to overtake pumped hydroelectric energy storage next year, like almost certainly. And this is a pretty big deal because for people that don't know about the energy storage market and grid stability in general, when you look at installed grid storage, which is grid storage capacity, to help stabilize grid and operate grids, in 2020, pumped hydroelectric energy storage, or PHES for short, made up 90%, again, 90% of installed grid storage. And battery energy storage was at just 17.6 gigawatts, which is like minuscule on the global level. Today, 4 years later, pumped hydroelectric has dropped to just 56% of grid storage. So it's dropped by almost half in its contribution, while battery energy storage has jumped to 156 gigawatts from 17 gigawatts in a 4-year period. That's a 790% growth in installed battery energy storage globally. That is mind-boggling. I didn't even, I've followed the battery energy storage industry. I had no idea the magnitude of that was that high. Not even close. If somebody were to ask me that before I had read those articles that I read, my guess would have been maybe 250, but 790% is insanity in a 4-year period. And to me, this is a huge signal. When this data was not available, maybe you couldn't have made this conclusion. This is a huge signal about the intention globally to start treating these systems as mature systems. 4 years ago, there was a lot of conversation about whether battery energy storage is mature enough to be a player in grid storage.
I got you, Devo.
And the thinking 4 or 5 years ago was there's no shot. And the biggest complaint at that time was duration of storage, which was very, very low. Duration of storage is still low, compared to the pumped hydroelectric peers. So pumped hydroelectric they're doing, roughly 8 to 12 hours. There's some systems doing well over 12 hours of storage. And battery energy storage systems have a much lower threshold. You're talking about, the newest systems doing 4 hours, and some of the cutting edge systems targeting 8 hours. We don't know if they'll get there. But so from that perspective, there is still an advantage to pumped hydroelectric. But purely from a deployment standpoint, this is really, to me, data that is showing pronounced money flow in one direction. Over that same 4-year period, pumped hydroelectric grew 23%. That's it, versus 790% growth. And by next year, they'll be either on par or you'll have a total capacity exceeding pumped hydroelectric. For anyone that understands energy storage, and I know many people in the audience may be think I'm speaking a different language here, but if you even have a basic understanding of energy storage, this is insane. One of the most insane things I've seen from a trend standpoint. So I would expect a lot more battery storage competition in the next few years, not only to Tesla, but in general. I know there's a lot of smaller companies that people look at, like EOSE and ENVX and these other companies that they think are loosely associated. Right now, the industry leader is Tesla, especially on the cutting edge. If you're talking about the 8-hour plus duration, that's going to be in the next gen. Tesla will probably lead that initiative too, but there's going to be a lot more competition. And basically, anyone that makes batteries now has an incentive to make these. But that's a pretty phenomenal trend that's taking place that I think everyone should know about and is worth keeping an eye on. Again, there are distinct performance advantages to pumped hydroelectric, but it's still pretty stunning to see the deployment growth. So, yeah, I know that people might be rolling their eyes, but I thought that was crazy.
Debo asked in the chat who the winners are besides Tesla, who you think some winners might be besides Tesla.
I don't really have names off the top of my head. I'll probably have to do more work to come up with other names. I mean, I would say Tesla is a good exposure. The problem with Tesla is that the vast majority of their market capitalization is dependent on the core business, and the energy business is still much smaller. But if the energy business continues to grow at the rate it's growing, then the energy business will become a material contributor to the top and bottom line for Tesla. It's their highest margin business. And, I think there's a lot of focus. Look, Tesla has headwinds. One thing I'll preface with, Tesla has serious headwinds on the car business. Those headwinds will continue to be in effect for the foreseeable future, at least until rates come substantially down. Then the car market will probably start ripping face again. But in between now and then, the car business has significant headwinds. The energy business has had no such headwinds. If you look at the last 5 quarters and you look at the growth of the energy business, it's marvelous. I mean, there were quarters where they were growing at a 250% clip. There's quarters where they're growing at 150% clip. Regardless, they're growing it by multiples every quarter, and from a deployment standpoint. And it's much easier to retain margins in a cutting edge industry like that, where there aren't many competitors, than it is in an industry like autos that is super saturated with competition. Those types of any kind of industry, and this applies for people that are looking at any industry where you have a product that is difficult to differentiate from competing products, and you have a ton of competitors, those products are destined to be commoditized. But there's often a runway, sometimes it's 5 years or 10 years, where in a new industry, the industry leader has such a performance or technology advantage that they can fend off both impacts to their pricing power and competition outright. And sometimes that period can last for a decade, sometimes it lasts for 20 years, sometimes it lasts for 5 years. I mean, it's hard to put a number on how long it'll last. But right now, I think Tesla does still have that advantage in battery energy storage. But there are more competitors than people think. I think and most of the mature battery companies will have exposure there. But I did not expect this industry to grow quickly. I mean, I first started talking about battery energy storage I first started looking into it and talking about it back in 2018, 2017, and it was nothing back then. It was less than 10 gigawatts. It was literally was making no contribution to natural grid storage, and now it's roughly 50% of total capacity. That's madness. I mean, that's a trend. So yeah, anyway, I think that's probably worth mentioning.
Evan, to answer your question, Tesla's by far the number one. If you had to choose some dark horse candidates or purely spec plays, I do think STEM Energy, ticker STEM, Fluence, ticker FLNC, are interesting plays.
That's the one. Yeah.
Yeah, to ride this thematic. But again, they're both such spec players that this might be another EV situation where it's Tesla versus Rivian and Lucid, and you've seen how that turned out, where they're vying for second place, but really solvency is going to be a major issue. But again, those numbers that Stock Talk just called out, like, wow, if that starts getting more momentum next year or so, these names probably can catch a bit, especially with how beaten down STEM has gotten in the past couple of years. And Fluence is definitely, I think, the number 2 play I would do it at. But again, why bother when you can get Tesla, in my opinion? But that's just my 2 cents.
Yeah, the thing with Fluence is, Fluence has been a battery and energy storage in general player for a while. They actually have really good products, and the valuation conversation is entirely different. I don't even know what their balance sheet looks like. I haven't looked at the stock in a long time, but this was a popular sympathy to the energy storage theme for a while. The stock's kind of done really, I think it's down like 50% since IPO. So it's done really not much since its IPO. It IPO back in 2021. But yeah, I do agree that they will be a passive beneficiary if the industry size grows. This is one of those examples. The reason I felt like it was worth bringing up is one of those examples where the pie is growing rapidly, right? Like, one analogy we can use here is the EV industry, right? We've seen the EV industry have this crazy accelerated pace in the prior 5 years, and a lot of investment got ahead of itself. A lot of inventory stacking got ahead of itself. And this year, when EV adoption slowed rapidly, I mean, it's still growing, but the acceleration slowed rapidly, that trend kind of hit ahead, right? And you saw this big relief in the EV stocks and lithium prices and all that stuff. You're not going to see the same type of headwinds in the energy storage market because there is, again, an enormous amount of runway. And to a lot of municipalities now, I mean, Australia, by the way, huge round of applause to Australia, because Australia has been a pioneer in being a testing ground for these large-scale energy storage systems. Prior to 2018, these massive battery complexes were not very common. In fact, I don't think there were any, really. The first major project was the Big Battery Project in Australia that Tesla helped with, which has since then expanded pretty rapidly. And now Australia's re-upping their order. They're doing an $800 million project, the largest megapack project in the world that they're going to deploy. It's a win-win. You don't have to get rid of peaker plants. You don't have to get rid of pumped hydroelectric. You don't have to get rid of these things. This is a supplementary investment. It's not perfect. It doesn't line up. Like I mentioned, there are storage disadvantages in terms of duration of storage. There is nuance to this. I'm not flatly saying that this is like the new thing
NIMBY.
that everyone's going to use.
Is that a ticker you like?
But there is the dynamic here that you can benefit from, which is the idea of additional energy solutions.
Should I ask them what they think of NIMBY?
One thing I hate about the energy conversation in general, not just with regard to like next gen energy, is this idea that people feel like nuclear and solar and wind and oil and gas and energy storage and peaker plants and pumped hydroelectric, that all of these things are mutually exclusive. They're not. They are not. The oil and gas industry can do very, very well over the next decade while all of these alternative systems of energy also grow. So I think there's kind of this misunderstanding that like these new technologies are somehow immediately disruptive or immediately displacing, and they're not. Energy is something that's universally needed. It is something that introduces a lot of geopolitical tension, and so new solutions for storage or energy production are, in my view, great things. I think they're just a win-win for everyone. So this is a trend I think to watch over the next few years. Like I said, it's been a trend that's been on people's minds the last couple of years. It's been, even talked about pretty frequently, but I had no clue the data was that strong at all. Like, I was very caught off guard reading that. So, yeah, anyway. Throw it back to you, Evan.
Yeah, you had Debo excited with that conversation. He was adding a couple points in there, so do love that. By the way, we do have NVIDIA CEO Jensen Huang, Dell CEO Michael Dell, and ServiceNow CEO Bill McDermott. They're all going to be live together on Bloomberg tomorrow at 2 p.m. Eastern. I thought that was a little interesting. But a lot of these indexes hitting up to new all-time highs. S&P 500, NASDAQ 100. I'm seeing Reddit with a little OpenAI partnership. I'll have to dig into that. But also the Dow Jones climbing above 40,000 for the first time ever. Stock Talk, what's your thoughts on where the general indexes are right now, and kind of compare it to some of the underlying stocks that you're watching?
I don't, because I'm an individual stock trader, I don't look at indexes on too short-term of a basis. What I do is I look at them on a medium-term basis. So I hounded about the 50-day moving average.
Honestly, that might be the end of the spaces anyway, I think, of the live stream. We've been going for a while, didn't get that much of data. But yeah, no, I appreciate this. I appreciate you guys for coming and hanging out with me. Make sure you're subscribed to the channel, hit that bell button, get notified whenever I go live. I'll probably do another one tomorrow morning, why not? We'll see long term. I think long term I might just do like exciting days where we have big stuff coming, not like every single one. Like I kind of knew this would be a boring one, but decided F it, why not? Lose nothing. I enjoy hanging out with all of you guys. So Paul and Debo and Ollie said hi, and who else? BroKit was in here for a while, a couple chats, Brandon, etc. I appreciate you guys, and I'll catch you all later. Enjoy the rest of your days.